Are you in the market to buy a home soon, but you have concerns about your credit score? Well, this episode is for you. Phil with Next Wave Mortgage reached out to me to be a guest on this particular episode. Lots of people who use our Stirgus Credit Repair service are only enrolled just to improve their credit scores to buy a home. So a lot of those clients ask the same questions day after day after day. What's the minimum credit score? What credit score is needed to buy a home? Can they buy a home with these negative items still reporting? Should they pay these items? Should they not pay these items? Many of these people have no idea where to go, and Phil is going to help me answer all of those questions for you.
You would always want to be on the side of having good credit.
Do you think it pays to have good credit? Phil, I want to thank you so much, man, for joining the It Pays to Have Good Credit podcast. It's funny you reached out to me, man, because for the longest, I have been trying to connect with someone who is in the mortgage industry. I've had a few local affiliates that I deal with, but they just simply just did not have time to sit down for, 30, 40 minutes to go over some questions. A lot of my clients who are enrolled in our credit repair service, 99% of these people are trying to fix their credit to purchase a home. A lot of people don't understand how DTI affects them. They don't understand that having maxed out credit cards can probably lower their credit scores 80 to 100 points. And a lot of people just simply do not understand what is a minimum credit score to have to even start the pre-approval process. So I'm very thankful that you reached out to me, and we're going to kick this episode off by first introducing who you are, how you help people, how long you've been in the mortgage industry, how did you get in the mortgage industry. So let's get started with that.
All right. Hey, my name is Phil Ganz.
Yep.
I started in the mortgage industry May 7th, 2001 as a telemarketer. I never would have thought I would have been in the industry. My goal was to be in the Peace Corps, which you had 9/11. It got canceled in February of '01. And therefore, I finally got a job in May as a telemarketer for a mortgage company, and the journey began. Currently, I'm president of Next Wave Mortgage. And, our aim is to help out, first-time home buyers. That's where my heart and soul is. Obviously, we help out everyone, right? But, I want to get real about credit, what you can do, and get people on the right track.
There you go. Absolutely. Yeah, it's cool that you have that exact date down. Just if somebody came to me and like, hey, Chris, when did you start your credit repair service? I know the year, but I just can't remember the exact date. So that's crazy. You remember that exact date. That's great. Well, let me ask you this, because I myself just purchased a home maybe 8 months ago. I just relocated to the Phoenix, Arizona area. And I was looking for resale homes, and I was actually dealing with your traditional mortgage lender until I came across these new builder homes, which you kind of may, see where I'm getting at here. They were advertising that if I and my wife financed through them or went through their loan company or whatever, they would offer a 3 or whatever percent interest rate along with help out with the closing costs. And in my head, especially in this economy field, that was like a no-brainer for us. A light bulb just blew up in my head. I'm like, wait, what? I can go from a 6% mortgage to a 3% APR. I think it's like 3 point something, 3.4, whatever it is. It's like half of the APR that they offer along with helping out with the closing costs. Do you think that these new build homes or these new builders are affecting the mortgage industry or just real estate in general? Because I just feel like, yeah, that's good, but it's also unfair for your traditional mortgage lenders who, have to go by what today's average rates are. What is your opinion on that?
Yeah, so let's get to it. Let's be realistic.
Okay.
DR Horton, Pulte, the new home builders
Yep.
are my competition. But I'm okay with this, right? I'm not going to win every deal. That's like asking me, it's fine. Because I'm going to tell you, the areas where these builders are, let's talk.
Yep.
It's the South, right? They ain't going to California. They ain't going to New England or New York or Massachusetts. Why? Because they can't make any money because it's unaffordable. The Bottom line is that these places that you would think that want affordability do everything the wrong way for
Yep.
affordability. They got more backwards policies.
Yep.
So am I upset that good states, well-run states, create economic policies for affordable housing? Absolutely not. Right? Let them build to the moon,
Yeah.
right? Because if you have more supply than demand, home prices will go down.
Hmm.
So look, you'll buy another house, you'll sell another house. You want to keep on doing that, you
Right.
know?
Right.
So I'm definitely for builders. I will say this though. Got to ask you a question, Chris.
Yep.
Did you go with DR Horton Pulte? Who did you go with?
No, I went with Meritage Homes. They're real big out here in the Phoenix area. I'm not really a big fan of the Dior Horton Homes just because I've just heard so many scary stories about that company. But it could be true, could be wrong. You know how things are on social media. But no, we went with a builder called Meritage.
Yeah, that's a big thing. People don't know this, but builders are different like level of quality.
A lot of my clients who are in road, or actually, let me back up. So 80% of the leads that we get throughout our credit repair service, most of these leads are referrals from realtors, loan officers, people who are dependent on clients or consumers with good credit. So a lot of these mortgage loan officers refer their clients to me, and we try to work on some of the collections that's on their credit to, improve their credit because if those items are removed, their scores go up. They can move forward with the pre-approval process. But what I'm getting at, I have about maybe 3 to 4 different loan officers that I talk to on a regular basis. And I guess it's confusing for both me at the beginning, but also now a lot of my clients because sometimes they're like, hey, Chris, when they get to a 580, send them back over. Or hey, Chris, when they get to a 620, send them back over. And they tell me so many different numbers: 580, 620, 640, 680. I hear 4 different numbers. Why is it that there's 4 different minimum credit score requirements depending on the certain lender that someone is working with? Is it the lender setting their own minimum credit score, or is it just different loan types?
So let's take this question and I'll give you the quick answer and then we'll have a journey.
Okay.
So the quick answer is the lenders want to create their own overlays or their guidelines, right?
Mm,
FHA is, let's just talk about FHA to keep it simple here, because that's
okay.
65% of first time home buyers.
Yeah.
580 credit score minimum with 3.5% down. Between 579 and 500, it's 10% down, right?
Mm,
Obviously, you want on time payments for 12 months, right? That's what I would, tell someone, right? You want, responsible people. But it's not only the scores, it's on time payments. This is something that people need to know. It's on time payments.
okay.
Not two scores are the same. A 680 and a 640, you could have a better 640 than a 680. If a 680 just had a recent late or two recent
Mm,
lights. It's not, scores aren't equal.
wow.
Scores are a prediction of what will happen in 90 days.
Mm,
Every lender is different. Now, what people don't know is FHA, when they give out a price for mortgages, they actually have no adjustments. Whether you're a 501 or an 800, you actually get the same price. No one
mm,
actually understands this. This is the opposite of Fannie Mae and Freddie Mac, the two other quasi government agencies that have these loan level price adjustments. What a loan level price adjustments is, Fannie Mae and Freddie Mac charge a fee for certain characteristics: credit score, property type, if you're going to live there, occupancy type, so on and so forth. FHA is zero. People don't know this. Banks and lenders put their own risk factors to charges so they can make more money, right? Now, one thing that they do is they're also judged based on their FHA scorecard. So if they have too many defaults, their number goes too low. So certain lenders may either give better pricing for higher scores to get like an 800 FICO versus lower credit scores, right? Or they just put overlays. We don't want to deal with those people, so they get better scores. I think, look, if you want to change it, you got to change your scorecard, right? But you also have to change behavior, right?
Okay.
You got to incentivize behavior. And you're like, people don't realize people get addicted to gambling not because they lose, because they win. So I think you got to come up with more incentives for better behavior. And a lot of it is economic. And there's a lot more issues behind the scores, right? And it's just not manipulating the score so someone can get a loan, right? I tell people if you laid out the scores between someone's credit report between 580 and 640, I can't even pick these people apart.
Oh, wow.
It's hard, right?
Dang.
And that's why you have to aim for a different mentality, not just get someone in a home because it's a journey. That's why it has to be taught at the high school level.
That's the number one thing, Phil, that I hear on a daily basis with a lot of my clients. They just say that they just got in a bad spot because they were never taught anything about credit, and a lot of people like to blame it on school and not learning anything in school. And I agree with that. But, at the end of the day, a lot of these issues just come from our parents from not being financially stable themselves and not learning about credit themselves. So, I agree with you that it just comes down the family tree. But just transitioning back into the mortgage side of things, I know a lot of people, common sense tells them they need a certain credit score to be approved or get the process started with getting pre-qualified. They all understand that. But the next thing I have a hard time telling people is that your credit score is not the only thing that's factoring if you're going to be approved or not approved. And for some crazy reason, which is common sense to me, a lot of people still have an issue understanding this. They're like, oh, if I get to a 620 or a 640, I'm good. I got the green light. I'm going to be in this home and closing within 45 days. And I'm like, well, that's great. Just pump the brakes a little bit. There's a few more things that you have to pass before you can be cleared to close. And a lot of people do not understand how DTI affects them, which leads me to my next thing. And I'm pretty sure credit scores, job history, DTI, I'm assuming that's probably the only things that most people should have to worry about. Because outside of that, I think is what else? Maybe cash reserves in their bank account if they need that. But usually, credit score and DTI, in my opinion, and your job history are like the top three most important things to assume if you're going to be approved or not. And correct me if I'm wrong. But is there different DTI percentages or, limits for certain loan types? How does DTI play a role in the mortgage application process?
Yeah, let's actually take this is funny that you mentioned this. Let me tell you through a story. Yesterday, I got a call from a realtor. He's like, yeah, this client got approved for like, we'll just call it like 200.
Yeah.
Right. They made like 50 grand a year. Right.
Mm.
The guy cuts trees. Right.
Yeah.
And in Florida, your slow months are January, February, or January and February for tree cutting. Right.
Yep.
So his 2026 average was way less because he was like, didn't work than his previous 2 years. Now, the lender had given him a pre-approval. And you're like, Phil, can you give him the pre-approval for 200? I said, not till May 15th when the income like goes up because he actually, for 10 months of the year, he really makes like 70 grand. And for the first 2 months, he makes like zero. So it like averages out to like almost like a little bit more than 50.
Yeah.
So like I said, not till May 15th. And so you're like, well, what happens if I show him a house? Can I just, I could see what he was trying to do. I'm just going to go with Rocket. We're going to close this week. Okay. Say you close this week. What happens? You ain't getting the loan because the underwriter will see it and your income declines.
Mm-hmm.
That's the end of it.
Mm.
You're not getting the house. Here's the I started this, like I said, May 7th, 2021, where you'd have to meet the clients. Let me explain the perfect pre-approval process. What needs to
Okay.
be done? Step one, application. Thorough. Make sure everything is needed. Step two, provide, if you're a wage earner, your W-2s, your pay stubs, your last two pay stubs for 25 and 24. Because if you get variable income, you need that all broken out. Like over time, a lot of variable income, you need a 2 year history, a minimum of a 1 year history. Okay? And this is the big thing. They don't provide it. You need it. Driver's license. I need to make sure your name is spelled correctly. Your
Yeah.
accurate name. This is the big thing that people miss. The
Yeah.
spouses misspell everyone's name. It got to be perfect. And,
Well,
and, and the pay stubs are the same thing. I'm not worried about like losing a deal if someone's not going to perform because that was a bad deal.
yeah.
Like I don't want to be in the business of just trying to close bad deals.
Yeah.
If I can't deliver an A, I'm not interested.
Right.
Right. I'm not interested. So
Mm-hmm.
I want all of that. The next step, loan estimate. I go over all the numbers. Monthly payments, principal, interest, taxes, insurance, PMI. You got to know your payment. Then we go over all your closing costs and your cash to close. What do you need to close the loan? If you don't know, that's a big mistake that first time home buyers make. They
Mm-hmm.
have no idea. This step has been completely eliminated. And I would tell you it's been intentional because it keeps profits higher.
Mm-hmm.
Think about it. No one names their mortgage company app called Accurate Mortgage or like Let's Detail Mortgage or Loan Estimate. No one like accuracy. No one really cares about that. They name it after like either spaceships, cheetah mortgage, lion mortgage, things that
Yeah.
go quick,
Yeah.
right? And honestly, it creates friction. And the customers don't know either way. The more things you ask of a customer, the more less likely they are to complete the go down a funnel, right? The marketing people will tell you this, right? Like, I'll give you an example. On a form, if you just eliminate zip code and use someone's like IP address, you get 30% more forms. So
Mm.
like obviously if you're asking for more documents, you greatly reduce who you get. And if they're not motivated, and like the regular customer doesn't understand the importance of this. They say, well, the other guy doesn't. Well, the other guy is hoping that you're going to buy home past May 15th.
Yeah.
The other guy, when you don't go through, you're going to be so sad.
Right.
That's the big mistake. It's, they want the shortcut in life. We're in an Ozempic society. You know what I mean? They don't want it. But look, if you die of some side effect, and not to say that Ozempic doesn't have its benefits. Look, for certain people, it's great.
Yeah.
You know what I mean? But if you had to tell half these people you have to go to the gym and eat broccoli, they don't want to do it.
Right.
And I can't blame them.
Mm-hmm.
Look, I had to change my lifestyle. I had valve repair surgery, and I had to change because I don't want to go through surgery for a long time. But that's because I know the consequences.
Yeah.
People don't want to deal with consequences.
No, not at all. Um, let me ask you this. So I know what you were just bringing up things about first-time home buyers, and there's a lot of things they don't think about or just simply do not understand up front. In this economy, a lot of people are trying to save money. A lot of people don't have money to save. So I know there's different loan programs. There's USDA, which I believe you can qualify for the rural development where you can put zero down on some homes if they're, in rural areas outside of the major cities, more of your suburb towns. So you have that, and then you have FHA, which I believe you said is what, 65% of your newer home buyers. And then you have your grown up loan type, which is conventional, which requires what, 20%. But I think I've seen something where they have like 3 and 5% options. But anyway, is there any pros and cons of those three loan types for someone who is just starting to get in the process of purchasing their first home? Should they look at USDA just because, if they can move to a rural area, they don't have to put a down payment down? Or is that like a trick in the end? What is your opinion?
Here's what I would say is back to the loan estimate. You need to know your numbers. There are assistance programs where that would fill the void of you needing money.
Hmm.
So we'll start with that.
Yep.
And these type of loan programs allow the seller to pay your closing costs. So you don't need money to buy a home. So take your money and eliminate your credit card debt so you can buy a house. That's my advice.
Mm.
Right? Pay off your bills and get an assistance program and go over all your numbers. A pre-approval doesn't mean it if you didn't go over your numbers. I'd be embarrassed if you got a pre-approval and you're listening to this and you don't know your numbers. Well, I'm good. No, you know who knows their numbers? Rich people. You know who
Yeah.
doesn't want to know their numbers? Poor people.
Yeah. Yeah. I agree with that. Well,
Right? This is a big thing.
yeah,
You
absolutely.
know what's funny? Well, Costco, all sorts of people enter Costco. The rich people know exactly how much that cart will cost before checkout.
Yeah.
Poor people have no idea. They
Hmm.
have no idea what's going on in life. They don't
Right.
want to know. And maybe it's because they're just trying to get by.
Hmm.
But you need to organize your life and take responsibility to get yourself out of this situation. There needs to be accountability, and it starts with the person looking at the mirror.
Yeah.
You need to go over your budget. You need to know your numbers. This is it. That's what I
Yeah.
would tell people. There are
Perfect.
no
I love it.
tricks.
Yeah.
There are the programs where you don't need the money, but you got to be willing to go through the process. Loan app, all your docs. Don't tell me you can't find them. I want to hear you're going to get them all. That's all I want to hear is you're going to get them all. Don't fight me. You're just going to get them all. And
Yeah.
then we're going to go over every number, which is so different. And then you're ready to buy a home.
There you go.
That's why I don't have like, I try to minimize the issues in my life. I don't
Right.
want to deal with people that don't want to like follow the rules.
Hmm.
I'll work with any credit score. I'll work with any single person, but I will never work with someone that doesn't follow the rules. Not
Yeah.
worth it.
Hmm.
Let them be with someone else. That's like a 1-star ready to go complaint. I'm too old for that. Let Bobby Smith go to somewhere else.
Right.
I actually avoid, to be honest, since the more strict I've got, I just avoid these people. It's
Yeah.
actually a blessing
Yeah.
because they don't want to participate. They don't want to play the rules.
Hmm.
Not my problem. It's their problem.
Right. Well, is there such thing as someone getting approved for a home with the absolute worst credit? I know we always talk about the minimum required credit score, 580, 620, whatever. What if somebody has a 500 or a 450? Do they just put more
Okay,
money
so here's
down?
the thing, right? It's the
Yeah.
odds. This is getting harder and harder because of AI.
Yeah.
Um, they're getting better at predicting. So
Hmm.
there's less variance today than there was like many years ago. Just to let people know, you got the three credit bureaus: Experian, Equifax, TransUnion, right? You got three, right? Above them was Fair Isaac that sells all the mathematical equations for mortgages, car loans, a million different topics.
Yep.
And this is why sometimes there's different variations because the mortgage credit score is different than the credit
Correct.
card credit score. Okay.
Yep.
So yes, recently Fair Isaac's gonna have more competition, but this is something that you just need to know. There's less variation right now. So the reality is I would tell someone what's the lowest I've done. Like, yeah, if you're coming off like a BK or something, but realistically, the question shouldn't be what's the lowest I've done, which was like a I want to say probably like a 560,
Mm.
right? But it's not the lowest I've done. It really should be what's the lowest you should buy at.
Mm.
Wrong way to look at it.
Yep.
We're Uncle Phil says we need responsibility.
Yeah.
You need to get it in order.
Yeah, for
And
sure.
I'm here to tell people the truth. I'm
Mm-hmm.
here to help.
Right.
I don't want to see you fail.
Mm-hmm.
You know, I've helped people succeed. Look, it's not like, Chris, if I send you someone that said, hey, make sure they're ready.
Right.
They get it all.
Yeah.
They're ready to compete. It's
Yeah.
not just, oh, hit this number. Are they mentally ready to buy a home?
Right.
Right. There's no point in letting someone buy and then watching them fail.
Yep. I agree.
I'm not about that.
Mm-hmm.
I can predict this, right? Do I think
Yeah.
people should have an opportunity? Sure. Right. But why are you getting that situation?
Yeah.
Because I'll tell you this, credit score is also about mentality. Okay.
Mm-hmm.
That like people marry on credit score. You may not stay together, but you marry on credit. Like a 780 marries a 780. You gotta have a dating app. I'm surprised no one's not done this.
Yeah.
Right? Like all my friends have the same credit score because I'm annoying.
Yeah.
Right? I'm on it. I'm annoying. Right? My customers love me. I'm annoying. You know who doesn't go to me? People that don't want annoying. In fact, I'll tell you this. This customer of mine asked the realtor, and 740 people are annoying. This is the fact in life. He's like, "You got anyone annoying?" Which is really, do you have a loan officer that has a high credit score? Which is me.
Yeah.
You want annoying? Like, if you're not annoying, you want to be the cool person. Not annoying. 600. They won't talk to you.
Yep.
You want annoying? Yeah. You want people annoying in your life. They show up early.
Right.
People that can't show up early have bad credit.
Yeah.
I can predict credit based on behavior.
Same.
Same thing.
Yep.
Like, you know what's funny? I'll tell you that, like, my current wife knew I was going to marry. One date, like, we just stayed together. Like, I knew right away. She had high credit.
Yeah.
Wife before that, same thing. Once I figured that out, like, you don't need to go on 500 dates.
Yeah.
All you need is the same credit score.
There you go.
The most important credit
Shows
score
a
is
lot.
more important than religion.
Yeah.
Like if you said to me, and I'm Jewish,
Okay.
you know, what do you think? Give me my 800.
Yeah. Yep.
Like if you had a choice, like I had to marry a Jew with a 500, or I'm going to credit score. More predictive of behavior.
Right.
We have more in common than
Mhm.
religion. Credit score, you have more in common.
Right.
Because even if you had nothing in common, you'd be annoying and you'd show up early to something.
Mm-hmm.
Like you just like do things on time. Because if you grade a credit score, you're always early. Just the way it is. It's like a behavior, right? You're just always early. Right. Like if I was like an NFL franchise, right? And I'm evaluating these prospects. You know what? Why does Seattle's good? Because they probably hire good credit score people. And they want athletes that show up on time.
Right.
Right? You know who has good credit score? Kobe Bryant, Michael Jordan. Like I'm convinced I could produce the best athletes I could predict if I could predict credit score. You're like, no way. Yeah. Because they're repetitive and they're annoying. Right? And you're like, well, why do so many athletes go broke? Right? They had bad credit score. And the best athletes, I bet you says if we ran a test, right? I would bet you say that there was some truth to this.
Yeah.
That credit score was a predictor of athletic success.
Yeah.
Not to say that you couldn't achieve, because a lot of Hall of Famers may have had careers that made the money and whatever. But if you look at it, I bet you says Michael Jordan has a great credit score. I bet you says Kobe Bryant had a great credit score. I bet you says Tom Brady had a great credit score.
Yeah.
You know who didn't have a great credit score? Like the biggest NFL bust. Right? Like the flameouts had horrible credit. Like, and I would have predicted, like, if I was a GM and someone shows up late and I have the first round pick, I'm taking them off the board. Like 100%. Like, I don't miss. Like, if
Yeah.
I have an interview and someone's late, forget it. I already have a bad feeling.
Hmm.
Just saying.
Yeah.
Someone's like, but I'm always late. I wouldn't hire you,
There you go.
right? You know what I mean? And by the way, this is the big thing. You want to find your next wife? Pull
Credit
your
score.
credit score and then do this. It'd be unfair to you yourself if you were 660 and you wanted to date a 790. That person would break up with you. Doesn't matter how much money, they would hate you over time.
Yeah.
They will hate you over time.
Yeah.
Right? I can
Absolutely.
predict all my credit scores. I wish Facebook had like a credit score thing. I'm gonna just delete all my loans. Right? But
Yeah.
I'm just saying, like it's so true with credit scores, a prediction of behavior. Right? Like all my friends that ended up being like my friends later in life all had like really good credit. Now look, if you go through some like trauma, like I totally get it.
Hmm.
Right? But you know this to be true, Chris.
Oh
That
yeah.
are you married by the way, Chris?
Yes. Yes.
Okay. Is it safe to assume that you and your wife have the same credit score?
Oh yeah.
Exactly.
Absolutely. Yep.
Exactly. That's my
I mean,
point.
she
That,
she better has by me owning a credit service, right?
right? But credit was important to you,
Oh,
right?
absolutely.
Now, I
Yeah.
got a question. Do you think I'm right? Do you think that people end up getting married based on the similar credit score?
Yeah,
Friendships.
I actually made a social media post on my Sturgis Credit Repair Facebook page maybe a year ago, and actually got a little bit of engagement somewhat. Some people was arguing or whatever, disagree, some agreed, but I literally posted like a little AI meme or whatever showing that there's a dating app for credit scores, or no, it was like new feature for dating apps will now display credit scores or something like that. So,
Is that true? Do any do that?
no, no, it was just a
I
fake
just
thing.
wanted to
Yeah,
do that. I just
yeah,
wanted the credit score, and then we would just have it.
yep. There you go.
I think it would be a success would matter. That would matter.
Yeah.
Like this is object. Credit score would matter than race, religion, or education,
Hmm.
and even looks. You're
Yeah.
like no way, because
It's
you would
behavior.
enjoy that person being on time. You're like, yeah, because I've thought of this, right? Like, because even if like nothing was like on paper, like what you'd want, at least they'd be like on time, respectful, right? And like you'd have the like you'd both be like similar in your
Yeah.
behaviors,
Right.
right? Like you'd communicate the same way. And you would find this really enjoyable, right?
Hmm.
Because AI, these people mess it up. Like you don't have to. Fair Isaac is already a genius. You don't have
Right.
to reinvent the wheel of questions. Questions are like irrelevant,
Right.
right? I wouldn't even have to talk with the person. I'd be like,
Hmm.
yeah, let's get married. Like,
Yeah.
if I had, I'm just saying, like, you know, this would work. And I think one of the things is like you found the right wife. But if you told her that you had this podcast and you'd fill it on, say, do you think we could just marry people based on credit score?
Yeah.
Yes, right?
Yep.
That's the first thing I would check. I got a baby message. He wants to get married. What's his credit score?
Yeah.
The most important, you know what it is? People ask all these other irrelevant questions.
Hmm.
Doesn't matter. Like, oh, do you like sports or do you like this or do you like all
Yeah.
these? They don't mean anything because the Patriots don't play all the time. The
Right.
only thing that I care about for a perfect match is your credit score.
There you
It
go.
is the determining thing. And it also predicts, this isn't always true because you'll say this, but the higher the credit score, the usually the person has higher integrity, right? More like, not always, but more likely,
Hmm.
right? There's other factors behind it with economics that people would like point out and all this. But I'll tell you this, Chris, when you found out your wife had a high credit score, that made you smile.
Yeah, I mean, it just, I just did not. I'm a guy that's big into finance, and I just did not want to deal with someone who have finance issues, for example, we just relocated from Louisiana to Phoenix 8 months ago, like I said at the beginning of this episode. And if there was any issues with finances or credit scores, we will still be in Louisiana right now. So, that's very important,
That's so
just,
crazy. You're in Louisiana, and I brought up that LSU thing with Shaquille O'Neal and Stanley
oh yeah,
Roberts.
yeah, yeah.
You got to take a look at that. In fact,
Yep.
Shaquille O'Neal says himself that Stanley Roberts had more talents.
Yeah, absolutely.
This is like
Yeah.
a big surprise, and not a lot of people have done this. And I'll tell you why. They don't want to give enough credit to his dad, and they don't
Hmm.
want to give enough credit to Tiger Woods' dad,
Yep.
and they don't want to give enough credit to Venus Williams' his dad.
Hmm.
For whatever reason, we got like when you have an exceptional parent, we never want to give enough credit.
Yeah.
Just saying,
Hmm.
right? Me and you think alike. We'd be
Oh yeah.
definitely great friends. We hang out all the time.
Absolutely.
I would
Well,
annoy you. You'd be like, Phil,
no,
where are
you
you?
nah, you're okay. Well, speaking of great credit, let's transition into the next situation here. Let's say if someone has great credit, 750, 760, 780, and I actually get access a lot. That's why I'm bringing this up. But let's say we have someone come to you, Phil, and they have a 750 credit score, but they recently forgot that they had a balance on their credit card. They thought they paid it off, but interest was added. And then the reason I'm saying this is because I just had a client that I'm working on a Discover credit card late payment. He paid off his card after his last statement date, so they added interest to it. So he paid it off. It shows zero balance, but once the next statement date came, it charged him interest because the balance wasn't paid off soon enough. And he has a 30-day late payment on his credit recently because of a $3 charge. It is insane. It's stupid. We tried to go the Goodwill route to where we request them and try to negotiate. Discover did decline that. So now we're in the process of trying to dispute it directly with the credit bureaus. But moving forward, let's just say this person here, his scores are 750, but because he have a late payment within a 12-month period, will someone like him have a issue getting approved for closing?
No.
Really?
If it's one time, look, I'll tell you this. If someone has it one time, I've seen this, you'll usually fly through
Okay.
because everything else is perfect.
Mm. Yeah, I see. Yeah, because I thought if it was within 12 months, what is the guidelines? Is it 24 months that you shouldn't have
No,
any
you want
late
on-time
payments?
payment for 12, but
12. Okay.
you're seeing a one-time mistake for a rich person.
Yeah, yeah.
If Kobe Bryant had a bad game, does that mean he's not Kobe Bryant?
That's true. That's true. I agree.
Right?
Yep.
That's what I would tell you, right?
Yeah.
Like,
Now, if
and
it's
I would
three or
say
more,
they
it's an
would say to
issue.
you, "I'm sorry." They would admit it, right?
Yeah.
Dealing with like bad credit people is like watching like a crime on like Netflix. You got to put everything together, and they're blaming everyone else, and
Yeah.
it's a personality disorder. That's what bad credit ends up becoming. You start lying all the time. I hate it.
Oh man. Well, let's talk about this then. People with collection accounts, although I'm not really a big fan of paying collections if they're not going to be removed, but that's a different discussion. But let's just say if somebody has three collection accounts on their credit that they haven't, paid a creditor back, these are years old, or maybe they're within, let's just say they're within 12 months, just to keep it easy. And they have three collection accounts. But Phil, they went on and paid them. So the balance is now updated to zero, but on their credit report, it still shows three charge-offs, so three collections. Will that person have an issue with a 700 plus credit score?
Not with that credit score. And like I would tell anyone is people always say, do I pay this or do I pay that? Here's my
Yep.
thing. If you owe someone money, you need to pay it.
Mm-hmm.
That's it. If you just have this mentality of I'm going to stiff people along the way, buy things and not pay for it, that
Yeah.
sets a bad example. I don't believe in that philosophically. If
Yep.
you bought that TV, you need to pay for that TV.
There you
And I
go.
don't care if that hurts in the short run. It is
Mm-hmm.
the right thing to do. I
Right.
am never going to tell someone you should stiff someone, not pay someone. This is just such horrible behavior. It catches up to these people because they think
Mm-hmm.
they'll get away with it next time.
Yeah.
If you owe someone, you pay them.
Right.
And I don't care if you co-signed, you pay someone.
Mm-hmm.
That's it. I don't want to hear about your ex. I don't want to hear the story.
Yeah.
I don't want, there's no story. If
Yep.
you're legally obligated, I gotta tell you a story of what's happened to me. I was on a title of a car, and it was like in Connecticut,
Yeah.
and it was like an ex-girlfriend. I wasn't on the mortgage because the mortgage got paid off. I paid off the car loan, but I was still on the title. I don't know if this makes sense. So like there was a mortgage, like relationship ends. I didn't want to, like whatever. I pay it off. She then crashed the car into a utility pole.
Oh boy.
You know what? Guess who had to pay for the utility pole?
Yeah.
Me. I was untitled. That's it. I don't want to
Wow.
hear it. I paid.
Yep.
That's it.
It's your job. Just take
I don't
care
want
of
to
it.
hear about not paying. If you're legally responsible, I don't want, this is not Judge Judy. Uncle Phil is going to make you pay.
Yep.
This is the problem with society. There's no responsibility.
Mm.
Can I get probation? You're lucky I'm not a judge.
Right.
I would just give maximum sentencing every single time.
Oh
No one would
boy.
ever want to go with me.
Yeah.
And that's the way you do it. If you have
Absolutely.
two choices, maximum sentencing or just like minimum sentencing, maximum is the way to go. It stops crime. It
Yeah.
just does. You see these countries, I don't agree with all these countries, right? I think there's certain countries where if you spit gum or whatever, there's a
Hmm.
Dubai, right? Everyone's all they're bad. You go to no, yeah,
Yeah.
they're clean. No one does any trouble,
Right.
right? Once you give the opportunities to just we'll start forgiving, you can create a reward system for doing things.
Yeah.
So I think if you owe it, you should pay it right away, immediately.
Right.
No, look, pay whatever you can. If you want to negotiate it, fine. But not paying to me is not acceptable.
Yep. Well, I, of course, am in the credit industry, and a lot of people know who Dave Ramsey is. I'm sure you know who Dave Ramsey is. Dave is a guy who became very, very, very wealthy and successful by sticking to his no debt mindset, right? I think he tried to invest into real estate, use credit to invest into real estate, and it fumbled on him. And, he had that bad personal experience with using credit or using borrowing money as a way to leverage his real estate business, and it failed. So I definitely understand his mindset and his viewpoints with a lot of things he talks about, and he has built a huge amazing following, helping many people who have gotten themselves in bad credit situations. Now, some things I agree with, or many things I agree with, and then there's a small percentage of things that I don't agree with. But being said, I know he has his own viewpoints on using credit to buy a home. That is one of the things that he actually do support still, but to a certain degree. He do not support 30-year mortgages. He only believe if you buy a home, it should be under 20% of your income, so your DTI, 20%. And it makes me wonder, what is a opinion of a loan officer's viewpoint on that? Because I know with mortgage pre-qualification, they will approve you up to what, 43%
Okay,
total
this is a
DTI.
really hard question, and I'll tell you the
Yep.
reason why of disposable income. If you're in
Yep.
a high net worth area, you might have a higher DTI, but your disposable income. For people that don't know what disposable income is after you pay off all your bills, what do you have left?
Yeah.
So if you're like in New York and your DTI is say 40, that's not the same thing as being in Ohio and being 20. You could actually have way more money with a higher DTI and more disposable income. So I
Mm.
would say more of a stress test of you wouldn't want to be stressed and you want to be able to save.
Yep.
That's what I would tell people. But then again, you got to move to an affordable place. And this is what people don't want to know. I moved from Boston to Florida, more
Yeah.
affordable. If you just want to stay in unaffordable, it's not my fault. By the way, Chris, where do you live? What city?
Around the Phoenix, Arizona area. Yep.
Phoenix,
Yep.
right? Right. That's media market, right?
Mm-hmm.
So that's
Yep.
more affordable,
Mm-hmm.
right? You could have never bought your home in LA,
Oh no, for sure. It
right?
was
So you
it
did
was a
it. You
big
moved.
difference moving from
You moved for
Louisiana.
the opportunity. Why did you move? I got to ask you.
Just scenery. I like bigger cities. We didn't really have that in Louisiana. My wife, she likes more of the mountain scenery. So Phoenix kind of had both of best worlds. We looked into Dallas, Texas, just because they get all seasons of the year. But the mountain scenery out here, man, it kind of just drawn us both out here. So that's why we moved.
I love that.
Yep.
Affordability is key. That's what
Hmm.
I would tell everyone. People don't want to move. You're like in New York or some big city.
Oh yeah.
You don't have a chance.
No,
What I
for
would tell
sure.
anyone is if you're on the New England Patriots and you're a backup to Tom Brady, you ain't going to play. You need
Yeah.
to get an opportunity. And this is actually why people need to have an opportunity to move, to have a chance.
Hmm.
If you don't want to move and you live in a certain area, then you're totally, but I got family. So what? That's why you got Zoom or FaceTime.
Yeah.
I don't want to hear it. I
Right.
don't want to hear it. Relocate. Not my fault.
Yep.
You know, that's
Hmm.
what I would tell people. You don't want to take a chance, not my fault.
Yep.
Right? That's what I have to say. Right? Like, you gotta like, you gotta relocate to have an opportunity.
Yep. Why can a account not be in dispute status when buying a home? I think that's a little weird. I get a lot of my clients are like, "Hey, Chris, I know we stopped the process a month ago. I got pre-qualified, but I'm trying to be cleared to close, but the lender will not let me get that until the account is out of dispute, which that should take 30 days." But, why is it an issue whenever a negative item is still in dispute status?
Well, it wasn't originally, but now it is because people
Mm,
use that as a tool to manipulate the credit system.
I see. Makes sense. Yep.
Right? You'd have bad people, they'll just put everything in dispute all the time.
Yeah, I see. Makes sense. Yeah, I was always curious on that. And do you only serve the state of Florida field?
No, I just got approved in California. Let me
Oh,
tell you the
cool.
states. We got California, the great state of Texas,
Wow.
Florida,
Okay.
Georgia, Massachusetts, New Hampshire, Rhode Island, and Colorado.
Okay. There you go. Yeah, I just written
That's
those down.
primary.
Yeah.
Investment property, I can do any state.
Okay. Yeah, we have a lot
50,
of clients
50 there.
investing.
That's what I would tell you.
Okay. Wow. So you have a great um, distance of areas that you serve. That is perfect. Now, here's the question, and this is the last thing I have before showing our audience where to find you and things like that. This is actually a funny one because I've always wanted to have a realtor on this podcast and also someone in the mortgage industry. And I wanted to ask both of you guys the same exact question. Should someone contact a realtor first or a loan officer first when getting in the market to buy their home?
To me, it's obvious, right? It's a mortgage guy, but that's not the way it works. People want to get interested to a
Yeah.
certain process. That's what I would tell you.
Yeah. Yeah. My realtor that I had on the podcast platform, I think it was last month, maybe it was earlier this month. Great lady. I actually found her in the Phoenix, Arizona area and reached out to her to be on the podcast. And she kind of said the same thing, nothing negative or anything like that. She says that it's a teamwork thing. You need both. If you're looking for a home or you need to know what's in the area, you need a realtor. If you're looking for someone and you're trying to know how much you can afford, obviously you need to contact someone in the mortgage industry. So at the end of the day, you're going to need both. It's a team job, so it really doesn't matter. But realistically, if it was me, I don't like to waste people's time. I like to go ahead, get pre-approved, know what my budget is, then contact a realtor and say, hey, look, I need help finding homes in this area, or help me find which areas are best. But here's my price range. And that's just me. Some people are different. Some people like to just pick their, pick realtors' brains and things like that, and then get pre-approved. I don't agree with that because I just hate wasting people's time. So other than that, Phil, we have talked about a lot of helpful topics. You've answered so many things and even talked about things that I even didn't have too much education on myself. And I really appreciate that. For those people who are listening or watching this episode, how would they get in contact with you or your company if they are in the process or getting pre-approved for a mortgage?
I would say just call or text me 617 529 9317, 617 529 9317. And I'm here to help. I really say that. I'm on LinkedIn, I'm on Insta, I'm on Facebook, but realistic, just reach out to me. Let's have a normal conversation, maybe on Zoom, so we can help everyone out.
There you go. Yep. Well, I appreciate it, Phil. It was great talking with you on this episode. And look, if there's any time we can meet again to talk about some more cool things, I'm always down for it. Thanks for tuning in to this episode. If you wish to be a guest on our podcast, visit StirgusCreditRepair.com and click the podcast page to schedule an episode. If you need help with your credit, you can also sign up at StirgusCreditRepair.com and start your free trial today.
Stirgus Credit Repair. Stirgus Credit Repair. If you want a new house, call us. If you need